Good evening, everyone. This is James coming from Dividend Stock Talk, where we talk about dividend stocks and investing for monthly and weekly cash flow. If you're not getting at least double-digit returns with your investments, then someone is not telling you something. Why do I find this so important? Why am I so passionate about this? Because we all live in what I believe to be a clouded illusion or delusion, where you believe everything people tell you. But the funny thing is that people don't tell you the truth. They don't tell you what is real and what is not real, what is right, what is wrong. They tell you what they think you want to know. Or they tell you what the powers that be want you to know. So, I'm a little uncomfortable with listening to people. I get frustrated when I hear people say, hey, invest your money here, we get the best rate of return there is, or you can get the best rate of return. Please give me a break. If you're not getting double-digit returns on a consistent basis, someone is not telling you something. Okay, plain and simple. Double-digit returns are simple and easy to get, and relatively safe, depending on time, effort, and desire. You want double-digit returns? Great, fine. Do the work. Do the research. Make the investments. Do something. It's out there. If you want the status quo, what everyone else is offering, right now banks are offering 1.2%, I believe, or 1.1% for a CD. Fine. If you got it, you can't afford it, put your money there. It's safe, relatively speaking. If you take into inflation and taxes and all that other crap, you're actually going backwards if you believe the 1% crap. Anyway, let's get back to what I was talking about, double-digit returns safely with dividend stocks. Now, I do dividend stocks specifically because they have a track record. That means they've been doing it for years, not just years, but for generations, 10, 20, 30, 40 years, some 50, 60 years. The stock market's been around since the 1600s, okay? Not here in the United States. It's only got here in the United States in 1776, I believe, or 1777, somewhere in that area. But it's the stock market we know of today. The way we know it as of today started in the late 1500s, 1590, somewhere in that area. They actually sold the oldest stock on record, where there's a copy of the original stock certificate. It's from 1602. So it's been around for a long time. Nothing has changed from the time they thought it up to the time they brought it over here to the United States. They want people to share in the profits of a well-run company. That's basically what we're investing in, the profits of a well-run company. Now, there's only two different kinds of stock, two different kinds of companies. There's the private companies and there's the public companies. And private companies, unfortunately, you can't invest in. The public companies you can invest in. When you're invested in a public company, you got two choices. The companies that share their profits with their investors, or the companies that take the profits and reinvest them back into the company for future growth. All depends what you want. If you want future growth, this is not the place for you. We are looking for weekly and monthly cash flow based on dividend stocks and dividends. Now, dividends is just a small fraction of what we do, but we use the dividend as a precursor or an indicator or a traffic signal or a light beacon, whatever you want to call it. It is something that tells us that, hey, something's about to happen in this company, regardless of what it is, but it's something that's going to happen that is informative to all the investors. Dividends. The time that the company announces that they're going to give out the dividend to the time they actually pay out the dividend, a lot can happen. And with companies that are 100 years old, they're basically the same thing day after day. How many different situations or how many different occurrences or how many different things can go on in a company that makes soap or a company that makes auto parts? It's auto parts. It's soap. It's, oil. It's whatever it is the company specializes in doing something. Whatever that company specializes in doing, that's what they specialize in doing. The Clorox company, they specialize in making Clorox. WD-40 company, they specialize in making WD-40. But interesting thing about these companies is They share their profits with their shareholders. Okay? So you buy some of the stock, you get a portion of their profits. The neat thing about that is you don't have to own the stock all year in order to qualify for some of those profits. Now, let me say that again. There is this misconception with investing that you have to buy a stock and hold it for a long, long period of time before you're eligible to collect some of the dividends. That's not true. 1, 2, 3, I say 2 days minimum. 2 days minimum you have to own the stock in order to qualify to be an owner on record, in order to qualify to get a dividend. So what do we do here? We've created a software that lines up all the companies that are ready to pay a dividend, and we put them through a bunch of mathematical formulations to find out which one is going to best suit our needs or our desires. And our desire is weekly and monthly cash flow. I want to collect a bunch of checks. I want to collect a bunch of dividends. If not, I want to collect premiums. Premiums are nothing more than the money that some investor will pay you for the right to buy your stock. Whatever price, Anyway, all that gobbledygook said, let's jump on in and see what's happening. Or see what happened last week as opposed to what's going to happen this week. All right, let's jump on in and see what happens. Alrighty, here we go. And this is our options account. Now we have 4 or 5 different accounts. Each one concentrates on a single strategy. A lot of people ask, why do I use paper trading or simulated trading? Point being, there are millions upon millions of people out there in the world, all coming at certain times in their life. Okay, like this person's getting ready to invest. This person's been investing for a while. This person's like, okay, might be mildly interesting. I trade these accounts all year round. Okay, so from the beginning of the year to the end of the year, you can get a good idea of what a return could be or should be using a particular strategy. Not just 1 or 2 trades. I'm talking all year round. Okay, this year, last year, the year before, the year before, the year before, the investment returns are consistent. And they're consistently, double digits. They can be as low as, I think, 10% is the lowest of a double digit you can get, and the highest is 99. Once you go over 99, then you're into triple digits. I don't tell people you get triple digits because it's very rare. I've done it a couple of times, but that's not what we're looking to do. We're looking for double digit returns. Now, the double digit returns that you're going to get are going to be directly related to the amount of time and energy that you put into it. So let's get back to the simulated trades. As I was saying, we do about 4 or 5 different trading strategies. Each account will concentrate on one trading strategy. So you can get to that part of the video and say, all right, I only want to be interested in dividend investing. Great, go to that section and say, all right, this is dividend investing. This is what should happen or what could happen if I invest in dividends. Now, if you want to do dividends on steroids, which is we look for the run-up into the dividend. Let me briefly explain. Dividend calendar, let's quickly go to the dividend calendar so you can see it. This is the dividend calendar. Okay, tells you all the stocks that are getting ready to pay out a dividend. Okay, you got 36 hit this day, 43 this day, 2 here, 1 there. I can't even count that many. Let's make it a list. Oh. All right, that might be a little bit much. This is for the month of October. Okay, today is, well, I should say tomorrow will be the 30th. That means there's 56 companies going EX on the 30th, 42 of the 31st. The first of the month is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 16. And there's 42 on Thursday and 59 on Friday. So that's 100, 200. That's well over 225, about 200, yeah, about 225 different companies just for this week coming up. Monday through Friday, it's 5 days. So what's going to happen? These 56 companies here, and these 42 companies there, and these 43 here, and these 59 there. The worker's going to come in, they're going to punch in at 9 o'clock, they're going to punch out at 5 o'clock, and what are they going to do? They're going to do the exact same thing they did last week, or the week before, or last year, or 2-3 years ago. The exact same thing. So what do? We look at how well those workers have performed. And that is told to us by the, what do you call those? The quarterly and annual reports. Okay, you have a quarterly report due every 90 days, and you have the annual report, which is due every year. Okay, that information tells us how well the company was run. Okay, we have that information to look forward to. We also have to look forward to these 56 companies. Let's take a good look at these 56 companies. Okay. Oh, look at it. JP Morgan sticks out like a sore thumb. See, some of these I know, and some of them I don't know off the top of my head. That's Charles Schwab. GTS, VL, is that value? Value Line Inc. What's VET? Vermilion Energy. Stellus Capital Investment Corporation. Shell Midstream Partners. San Juan Basin Royalty Trust. Tanger Factory Outlet Centers. Stag Industries. Student Transportation Incorporated. Tallgrass Energy. Tallgrass Energy, wait a minute. Tallgrass Energy Partners LP. What is that as opposed to Tallgrass Energy Partners LP? There's two different stocks there. Okay, whatever. I'm easy. Towel Shop Holdings. Okay, so anyway, as you can see, this 56 companies. How do we decipher who's who, what's what, what's going on? Let me quickly show you. I'm going to come up to the list. Oops. 30th, okay. We're going to export the file. Let's put it on downloads. And let's save. Oh, there you have it. All right, so let's go to downloads. Wow, now I forget when that came in. October. I don't see it. Interesting. Well, that was fun. Where did it go? Export to file. 217. Let's copy. Save. Let's see if I can find it. There it is right there. That should open it up. Should. Well, while I'm waiting for that to open up, let's go back here and see what's going on. So we're waiting for this to open up. Okay. Let's see what she looks like. This takes a little bit of time to do this, and this is one of those things you can do on your own time. I'll have to do it again, separated by commas next time. Come on, let's open up. This is kind of embarrassing because see now, I don't know what we're doing. Now we want to open it up by comma. There we go. Okay, let's see how she opens up now. There we go. That's an awful lot. Copy that. All right, so that's what we're doing. And just give me a second, I'm looking at something over here in the other software. Go publishing that. So we are going to go to 10minutetrader.com. Now that's going to take a while to do its work. While it's doing its work, let's see what we did or where we're sitting at the moment. All right, we have 3 positions that we brought over from last week. And let's see where we are with those. All right, BK. All right, here's BK right here of the year. BK opens up the year at 43, quickly finds the low of the year at 42.71, then jumps up to a trading range of 47. And this 47 trading range runs for about 8 months, okay, fluctuating anywhere between 48 and 44. Not a lot of movement, it's like a 10% movement up and down. Okay, so after about 8 months, she jumps up to a trading range of 52, goes sideways, which is where she is at the moment. She also, during that time, found the high of the year of 55.27. She settled in at 52.14, which is where she is now. And we have this at 52. So what we could do is first thing in the morning, tomorrow, we could sell this at 52 or better, 52.14 or better. Or we could go in and do what's called a covered call and sell the sell someone the option to buy it from me for the exact same price I just paid for it. Now the 52 is selling for 36 cents per share. Okay, So if I sold it at 52, as long as the stock stays above 52 at the end of the week, I get 36 cents a share, and 36 cents a share times, where is it? Let's open up the calculator real quick, because that's one of those things I just can't do the top of my head. All right, so you got 5,000 shares. And I'm going to multiply that by 36 cents a share. That's $1,800. Okay, so what we could do first thing tomorrow morning is sell someone the option of buying this from me at 36. Or, you see the size of the spread between the 36 and the 43? That's a 7-cent spread. I'm willing to bet that in the morning, depending on where the stock opens, now we had 2 up days in a row. Okay, it closed here on Wednesday at 51.73, but Thursday she opens up at 52, and Friday she opens up at 52.07. Okay, so I have 2 up days in a row. Can I go for a third? Because remember, they have the dividend coming up next week. So more than likely, where is BK? Oh, they have this dividend tomorrow morning. So more than likely, this thing is going to drop equal to the amount of the dividend, because the dividend's paying out tomorrow. Not paying out. Sorry, it's not paying out tomorrow. It's the EX date tomorrow. So the EX date is tomorrow. And basically, on EX dates in the next day following, have a tendency to open up on the downside, equal to the amount of the dividend, because it's going to be paid out. So tomorrow is the last day the stock is going to trade before the dividend is being paid out. So it might be a good idea just to unload it tomorrow, or, like I say, sell off the spread, the covered call. 36 cents per share for $1,800. Let me quickly check something. Oh, checking something else. Pages. And there we go. Just checking out one more thing. That's BK. So let's quickly check the software, see what the software says about BK. And let's refresh that. Whoops. That's the date of the dividend. Get that in there. And let's plot it and see what happens. All right, there we go. All right, this is what normally happens with BK. Look at this. One day, on average, in order for us to hit the target. What is the target? The target is the stock price plus the dividend. It's not a huge amount, but you close at 52.22, so you take that and you add a 19 to it, so it's what, 52.40 something. Okay. So for dividends on steroids, if you buy it 10 days prior to, as you can see, the red dots represent the dividend dates. Anything to the left of this is going to be pre-dates, like a day, 1 day before, 2 days before, 5 days before. This was 9 days before, and that is 10 days before. Okay? So what I wanted to find out when I created the software, I wanted to take the dividend date itself and find out how does the stock react to the dividend date. Now, all these represents 10 years worth of data. This is 2016, 2015, 2014, 13, 12, 11, so on and so forth. As you can see, 10 days prior to, 10 days before the EX date, it's way down low. It's at the low of the year. And she comes up there, and then she just keeps on going up until she hits, I don't know, what's that, 49 days after. So day 0, right, here's the day. Day 0 is the EX date. All these represent trading days after the EX date. Okay, so here's 90 days. Right, 90 days. What does that represent? That represents the next dividend, because most stocks have dividends every 90 days. So that's why I created this. I wanted to find out what happens on the dividend. And I want to do 10 days. Why 10 days? 10 days is basically 2 weeks. Okay? It doesn't sound like 2 weeks because there's 7 days in a week, but no, there's only 5 days in a week trading. You can't trade on Saturday and you can't trade on Sunday. So Monday through Friday, 10 days is 2 weeks. So I wanted to do 2 weeks before the EX date, and what does it normally do? Okay, so this is the average. If you take all the 10 years, you average, crunch all the numbers together, average it all out. Now it's not just one chart on top of another, because the numbers wouldn't match. It is a bunch of algorithms saying at the high of the year compared to the low of the year compared to the price where it is now to the date. It's nothing but confusing if I try to do it. But on average, this company has a tendency to move up within the next 10 days. That's why I wanted to do the dividends on steroids, because I want that 2.5%. So it's right here and going up. That's a nice chunk of a movement. And what happens after the EX date? She goes up a little bit, pulls back, and then goes up. Okay, so I am willing to bet that tomorrow this thing should continue to go up. So I'm stuck between, do I sell the 52 and collect that 1,800 bucks, or do I say let's just sell it outright and collect the difference between what it opens up at? If it opens up at 52.14, then I'm only getting 14 cents a share over the 1,800. I mean over the 5,000 shares. Clear that. We got the 5,000 shares times 18 cents. That's 900 bucks. So do I take the quick $900 and just move on to the next company, or do I sell off that and do the covered call? So I will wait on this one for the first thing in the morning to see what she opens up at, because I usually do all my trades the night before, which is right about now. But I'm not doing that tonight. I am actually going to look and see what is going to happen tomorrow morning. Now, that being said, let's take a look at Lowe's. Now, Lowe's started out the year at 66. Quickly found a low. As you can see, this looks like a triple bottom, but I don't know if you really constitute this as a triple bottom. You got 1, 2, 3, right at 65. Hits a low for 65, jumps up to the 72 area and trades there for a few months. Then she gaps up to the 82 area and she trades there for a few months, and then finds the high of the year at 86. Come back down to the 77, 74 to 77 area, and she settles in where she is now at 80. She had a down day on Friday, so most likely Lowe's, when are they having the dividend for Lowe's? What? October. I'm pretty sure Lowe's right there, October 24th. October 24th, which means they already had the dividend. Okay, so let's find out what Lowe's normally looks like. 4th. You know, the interesting thing about this, I could probably go back and show you that in a minute. Let's see what Lowe's looks like. Okay, Lowe's hits an average of, 1 to 2 days. Now the 1.9, you really can't count that as 1.9 because what's 0.9 of a day? It's actually 2. So about 2 days. Let's go to the average. That doesn't seem quite right because I'm missing 2017. It should give me the same numbers. Yeah, but why isn't it putting 2017 in there? That's something I have to talk to the programmer about. All right, anyway, needless to say, the dividend's 41 cents. The target would have been the closing price plus this is 81.94. Okay, that would be the new target price. Now, Lowe's doesn't have a big run up. It's basically sideways, and it goes sideways for quite a bit. And she doesn't start moving up until that's about 3 weeks after the dividend. She starts to run up. I don't think I want to play that game, but she does hit the target within 2 days, and that's what we're looking for. Depending on what your strategy is that you're looking to do, you're looking to just collect the dividend, or you're looking to collect the dividend and some of the run up. So as you can see, if you bought it like 10 days prior to, your average is at 41. See that? I can't even bring the cursor up to that number because it keeps moving on me. Okay, so when is it going to, if I bought it 10 days prior to, when's it going to hit that 41.1 again? 36, 41.1, right there. 18 days later, that's 3 weeks. Okay, so you buy it, you hit your price, and you get out. Like I said, when you want to hit double-digit returns, okay, this thing looks like that's 3 or 4 weeks. Okay, you get in, you get your profit, and you get out. Depending on how much time and effort you want to put into it, it'll give you an idea of what you're looking at. But the dividend comes in, pays out the dividend, stock goes sideways. This is 2 weeks here, this is another 3 weeks here, and then it goes up. Okay, but it goes up. Okay, and 10 years worth of data right here. 2016, what does that look like? Okay, it comes into the dividend. 3 weeks later, she goes up. 2015, what'd she do? She went up into the dividend. 3 weeks later, she went up. 14, same thing, going up. 13, she goes up, back down, and then basically sideways. But she still goes past the dividend right there and goes up. So whatever your target price is after the dividend, you get in, capture the dividend, and just wait for it to hit your target price. Okay, this one you can hit the dividend and make a little bit of profit afterwards. So that's what the software was designed to do. Show me how it performed over a 10-year period based on what the dividend was. Looking at 10 days before, 2 weeks before the dividend, and then 90 days after, which is up to the next dividend. It's like, can I get in, collect the profit, get back out before the next dividend comes in? That will allow me to buy this company, collect its dividend, and then move on to the next company and do this exact same thing. All right, let's get out of here. Back to where we were, right here. All right, so that's Lowe's. Most likely we're into Lowe's at 80.61. Wait a minute, where did we get Lowe's? We're into Lowe's at 80. Okay, so we could turn around and sell Lowe's at the open and still make a profit on Lowe's. Okay, so we're actually up on each one of these companies. 700 there, 100 there, and 200 there. Pfizer, PFE. All right, PFE starts the year out at a trading range of 31, quickly finds the low of the year of 29.80, and then goes back up to the 31, 32 area, goes sideways for quite a bit, and then jumps up to the 34 area and trades about 8 to 9 months there before shooting for the moon for the high of the year would be 36.77. She settles down. Now, why did she drop all the way down to 35? 3 down days in a row, she drops down to 35. Interesting. She closed at 35.60. Now, where do we have Pfizer? 35.50. So we're 10 cents in to Pfizer. Now, what would Pfizer look like on a covered call? 35.50 is what we got it at, and 41, which is going to be, clear this, 41 cents multiplied by the 5,000 shares. And that's going to equal to roughly, not that, 5,000 shares multiply 41 cents. Should be right around 2,000. 41 cents equals 2,000 bucks. Okay. Now, we could do that, and we probably should do that. Okay, so if you think about it, if we sell off, if we use this for covered call here, that's going to give us 2,000, and we use this as a covered call here, that's another 1,800. So that's $3,800 with almost little or no work whatsoever. Now it'll bring us in about 3,800, and we sell this off for another 200. It's about 4,000 bucks. That would bring us back up to $75,000, which not bad. Means we'd have to make 25,000 in 2 months to hit triple digits. I don't think that's going to work, but it's worth a shot. So all that being said, I spent all this time going over crap, and I didn't go over what is new on the list for this week coming up. I have no questions so far. All right, so let's get back to what we're looking at. All that being explained, let's look at some of the trades we're going to look at this day. Clear filter. We want to look at a week, and we want to look at September, October, November. All right, so tomorrow is the 30th, so we want to look at 10 days from tomorrow. Wait a minute, did I just clear the filter? Okay. Now, considering, okay, nothing on Monday. Let's clear this filter for a second. All right, this is what we got to look at. 15 companies tomorrow morning, 47 for Tuesday, 13 for Wednesday, 28 for Thursday, and 10 for Friday. So that's a nice little bunch to choose from. It's over 100 companies. We can copy all of these and putting them into the software, which is not that one. That one won't take all those bits and pieces, but this one right here will. Oh, didn't I put that in there? All right, let's hit go and see what that pops out, because that is all the companies there. Well, that's working. Oh, that worked already. Ah, now this is something get every once in a while. Is we have a glitch in some of the software. Okay, AGNC. Okay, it only has 5 years, so we don't want that. Get rid of that one. That one looks okay. This one only has that many. BDF. Okay, so let's reset. Get rid of bad if. Okay, so let's go all the way to the beginning. What are we missing here? Now, every once in a while, you're going to find is going to be one or two stocks that will stop the software from running properly. Why do I have so many here? That's more than I'm supposed to have. All right, so we're going to have to reset this. Let's go back to here. All right, week. Export the file. All right. Network shortcuts. Really? Quick access network shortcuts. All right, let's see if we can find it. Weekly stocks right here. Here we go. And we wanted it separated by commas. Remember we tried that last time and didn't want to work out for us? All right. All right, why is she taking her time opening up? All right, so while that's doing that, let's move on to see what we're going to look at. All right, that's all the companies there. I want to eliminate those and only do the weeklies because that's what this software does. All right, we did BK. All right, let's put BK in there. All right, that's what we showed for BK, and there's a lot to go into, picking out the right stocks. Here's what BK looks like normally. Okay, here's where she is now, and look at that. So at the end of the year, this thing goes up. So between that and we already showed what's going to look like on the other software. So and this. We're doing strictly verticals for this piece of what do you call this? This account. This account is strictly options. Now these other accounts here are different strategies also. But here we go. She's at 52.14. So if we do the 51.5, 52, we can look at about a 40% return. If we do the 51.50, that's not worth doing because it's only 1 penny. So it's not really going to give us anything there. So let's jump up to this and do that there. And let's see what that works. So see that right there? That means I have to sell something in order to make any trades. But BK is on my list. And I just take all these and stick them into wherever they want to go. That's not opening up, and that's a little concerning. Okay, so Tuesday, we've got 9 different companies to look from. Yum Brand, that right there, my friends, used to be, now I say used to be, for some strange reason they're not anymore, a dividend king. Yum Brands had increased their dividends or their payments to their investors for 50 years in a row. And then one day, all of a sudden they decided not to increase the dividend, and then they got kicked off the Dividend Kings list, which if you think about it is insane. Why would the CEO take Yum Brands off of the Dividend Kings list? I mean, you could have increased it by a fraction of a penny, but to stay on that list, that prestigious list, people buy those Dividend Kings specifically because they increase the dividends every year. I mean, that is a reason to buy in the first place. But you stop increasing your dividends and boom, they're going to kick you out. All right, that being said, let's not look at that. So Yum Brands is usually a no-brainer. Who is, I never even heard of these people, so we'll have to put that through the ringer, put it through the different softwares and look at the different charts. Target, a well-known company, but they have been going down, so I'm not quite sure how they're going to do with the dividends. Marathon Oil Company, okay. Eli Lilly, another big company. Kroger, another big company. JBL, Jabil Circuitry. IP is International Paper. Ooh, I made a big chunk on International Paper this year. And CF Industries, I'm pretty sure that's certified freight. They do trucking. So anyway, all these companies here have weekly options. And you know what? We're looking at the Mondays, and there's nothing on Monday's list. So we're probably not going to go much further into this other than answering some questions and going a little more in depth on the software and blah, blah, blah. All that kind of nice, neat stuff. All that being said, we got 4 for Wednesday. Microsoft, basically a no-brainer. Win is Win Resorts, okay. Marathon Petroleum. And Corning. They make Corning ware. And Thursday, we got a bunch to look at. Oh, Visa's on the list. Okay. They're a no-brainer also. Always hit the target within a couple of days. All right. All that being said, let's quickly check the questions again. No questions. The software is... All right, come on. No wonder why it's not opening. All right, it's not opening, but basically take the list, cut and paste it. Oh, what's this one right here? Oh, separated by comma. Oh, lovely. Get rid of that. 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 This is what happens when a computer gets stuck on you. It does all this weird stuff. Okay. This is the weekly. Okay, so 119. How could there be 119 on the weekly list? Oh yeah, that's right. It did show 119, didn't it? So all you do is just copy it, come here, paste, hit go, and see how long it takes for it to upload all that information. Okay, so there's a problem with the data. Anyway, put them in one at a time, put it in all at the same time. What did we have here? Okay. There's only 9. Okay, so CF, IP, JPL. CF, IP, JPL. You gotta be kidding me. CF, IP, JBL. Take a quick look and see what that says for those 3. There's 9 of them to look for. You guys, get access to the software, do it yourself. All right, CF, certified freight. An average of 3 days before it hits the target. International paper, 2 days before it hits the target. JBL usually hits the target on the very first day. What are they offering for a yield? 3.2, 3.2, at 1.1. JBL's only offering 1.1. Yuck. All right, the software, very quickly, you can go ahead to the chart, and this one goes to a different software, which is not working. All right. Click on the chart. That's going to go to Yahoo Finance, and it should give the chart with 10 years worth of data. There you go. No, that's 5 years worth. We're supposed to be on 10. All right, that's the maximum amount of data. So basically, what is it saying? It's saying is, if you bought this thing 10 years ago, which would have been '07, right about here, at $6, now it's at 37. So yeah, it was a good investment. Granted, you know, at the high of its lifetime, which was, where was that? 2015. Somewhere in 2015 was the high of 64. But now she's at 37, which is a lot better than she was 10 years ago. So on a 10-year basis, yeah, it's great. 5-year basis, not so much. 5 years from 2017 would be 2012. So 5 years ago, you're right about even. So there's no growth from 5 years, all right? But 10 years, yeah, it is. So another 10 years, yeah, most likely grow. Another 5 years, yeah, we'll see. But anyway, that's where the software takes you. This little chart right here takes you there. So you take a look at the charts from 10 years worth of data. Take a look at what the software is telling you. There's another piece of software too. CF. Let's take a look at CF. Put CF in there. All right. Plot the dividend. All right. It says October. We want November 13th. Because that's when it's having its dividend. Very important that you put the right dates in the software. That's for plotting the dividend. All right, a little over 2 days. Okay, average. All right. So she's going to go sideways for a little bit, and then she's going to jump up. All right, but most importantly, right here, average 2 days. Buy in. All right. For instance, the closing price was $37.45, so you take the $37.45 and you add 30 cents to it, so you're looking at the new target price of $37.75, and it usually hits it within 2 days, maybe 3 days, 2.5 days, something like that. That's what the software was created for. Okay, with 3,000 shares of 2.6 million shares, 3% yield. Okay, the high of the year was 38 and the low of the year was 22, so she's right in the middle between the high and the low, so that's good. But that's what we created the software for, to find out what the stock is going to do. Now, what is this button right here for? That plots the chart based on the day. Okay, based on the day. Okay, so today's date is 10:30. Okay, that says 9:30. Why does that say 9:30? September, October. Yeah, October 30th. Okay, plot chart. Not tell you how does the stock react to this day in particular. Okay, let's open this up a little bit bigger. All right. Now, all these numbers represent the average. Okay. This is today's date, or tomorrow's date. Well, actually, it's today's date, Monday's date. How did the stock react as opposed to this date? So, had you gotten in 10 days prior to today, I think basically going sideways for quite a bit. And then shoots up. Okay, that's what we're looking at. So you can two ways of using the software. Use the software by the day. How does this stock react on December 25th? You know, right around Christmas time. Okay, plot chart. And how does the stock react to Christmas? Okay, 10 days prior to, where is the 25th? Right about there. Why is my dot? Where did my dots go? All right, but that's the way it looks. 10 days prior to, and then just keeps on going up. A lot of sporadic movement, but it's clear to see that 10 days prior to the 25th, which is December 15th, she has a tendency to move up. Okay, so you can look at the stock and you can do it by the dividend itself. See after dividend is October. Wait a minute, no, it's sorry, November 13th, or the week of the 13th. And that's how she reacts towards the dividend. So there's two ways of using it. One is how does the stock react to the dividend, and how does it react towards the date. So that's the way we want to play that one. And I've been here for over an hour. I'm out of here. I make long-winded. Sure you guys don't want to hear what I have to say, so I'm out of here. And I will catch you guys next time. This is James from the 10-Minute Trader and Dividend Stock Talk. Wishing you best luck with your investments. And remember, keep your goals in mind, what it is you want before you buy